Not a whole lot to report here. Yesterday was a fairly flat day. This was the candle for yesterday. But you could see here that it was fairly volatile. We were down pretty hard for at least for some time in the market, and we've got this long tail up, but we closed here just below or at the 50-day moving average. So that was the trading action on Monday. Um, haven't done anything with my positions yet. You could see that this 200-day moving average is rising. So the line in the sand at this point is 2069. We closed at 2098. We haven't been able to stay above 2100 for the last couple of days. So we'll see a lot of bear market sentiment in the market, guys. Like I said before, everyone and their mother seems to think that this market's going down. We're getting a lot of different cross currents. Market is currently down a little bit in the pre-market, down 0.18%. I did want to show you something. This is a weekly chart of the S&P, um, and you could see it's just Tuesday. It's only been one day of trading today, but you could this week that is, but you could see that this blue line seems to be just flattening. In other words, it's not kind of up on the rise, it's flattening. Once this blue line, this is the weekly chart, the S&P, and this blue line is the 50-day moving average. It's different from the daily chart, which I showed you earlier. But on the weekly chart, which is a much longer time frame, once this blue line starts heading down, then that really does show that we are in a corrective period. But it hasn't happened yet. We've only had one day of trading this week. Disney reports earnings after the bell today, so that might impact the market. I will say that there's a lot of different cross currents. There's a lot of different statistics that people throw out there, data. It's not quite clear how you're supposed to interpret them, if at all. Yesterday, I heard someone say that 70% of the time that oil goes down, that the Dow Jones goes down with it. On the other hand, I also heard that bull market tops almost never happen when there is a decline in the oil market, and that in actuality, 80% of the time when oil has a 50% decline, that the market is higher after a year. So that's a lot of numbers, but basically, one person saying that when oil goes down, the Dow Jones goes down. Another person is saying that when oil goes down, the Dow Jones goes up. Maybe it depends on the time frame, maybe it depends on other factors. I don't know how to interpret that type of data. You could see here I'm pulling up a long-term oil chart and it's been destroyed. But what does that mean for the broader market? It's hard to say. Compare this chart where this is USO, the US oil fund. Compare this going down to the S&P 500, which has stayed the same. I mean, it hasn't gone really up, but it hasn't gone down. It's stayed pretty flat. So where is this all headed? Who knows? Um, let's just stick with our markers. At this point, I'm holding my long positions. 2069 is a line in the sand. If we go below this, I'll start taking defensive positions. If we go significantly below this and stay below this, then I'll probably take drastic measures. But until then, I'm holding my long positions. And we will wait and see.